Hedge funds shorting the Aussie dollar. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. I want to talk an article which is looking at hedge funds and the Aussie dollar. But before we do that, jump over here to this screen. Let's have a look at trading economics. We're sitting at 71.5 US cents. Oh wait, right now 71 and 2 US cents. Now, if we zoom out to all time, once it loads up, remember here, guys, remember back in around 2011, 2013, when we were over $1 US, everyone. That was nice times. That was really, really good times. So, I mean, around about here, I think I invested in a Kickstarter, and then here we got a refund. So we made a US Kickstarter. We made a profit from it. So there you go. That's my most notable Forex trade. There you go. I should run a course on that. Florian's Forex trading, buy laser cutting equipment and then refund it when their project delays. That's for free, guys. That's the freemium, and then you pad out the shit to a whole 6-hour course. But anyway, one thing we have to realize with the Australian dollar is that many see it as a proxy for the Chinese economy, everyone, and it's tied to a lot of resources and commodities like iron ore, which we're sitting at now at $145. There you go. It's crept right up. So, yeah, that's why certain shares are going up. Let's have a look at coal. Coal is at $240. It's shot up again. What scale do we have on this? We'll go 10 years. 10 years. And I'm just looking at when. We'll go all. I'm thinking back here. This is when we were doing mining work for coal mines. And the cost of coal, what coal would earn, would actually affect the quality of the projects. So there we go. Look at that, guys. Yeah. Need to keep an eye on it. Power's going to get more expensive for a lot of us. So let's jump over here and have a look at this article originally from Bloomberg. Hedge funds supercharge Aussie shorts as the RBA splits with the Fed. So, a dovish Reserve Bank of Australia is driving hedge funds to ramp up bets against the nation's currency as the policy stance increasingly diverges from the hawkish Federal Reserve. Leveraged funds have boosted net Australian dollar shorts to the most since November, according to the latest data from the Commodity Futures Trading Commission to the February 8th futures. And option speculators piled into positions to benefit from a weaker Aussie after RBA Governor Philip Lowe pledged to remain patient in assessing inflation, as peers in the US and Europe made it clear they will respond to heated price growth. Now, here's the thing. If the dollar goes down here in Australia, one little thing we've got to understand, and I will just bring this website up to show you all, the Observatory of Economic Complexity. I know we haven't looked at it for a while, guys. And let me just sign in here. We'll jump in. Now let's have a look. This is a great website if you are not familiar with it, everyone. I suggest you check it out. We'll look at Australia. It's great to give you an overview of our economy. Here we have our economic complexity. We're 79th in the world. Okay, our economy is, well, we are a service-based economy, but the complexity of our exports is not at the level of some other countries. But if we have a look down here, come on, we can see this is historic data, but it doesn't change that much. This is everything we're exporting. This is where we're exporting it to. But this is everything we're importing, and this is where we're importing it from. Now, if our dollar has less purchasing power, what do you think is going to happen to cars or petroleum or broadcasting equipment or computers? It means, well, we're going to get less broadcasting equipment, less cars, less computers for our dollars. Even ignoring the fact that we've got all these shipping issues at the moment as well, which is driving up transportation costs of goods and services that are imported, and we're going to feel it. I went to Bunnings yesterday, guys. I had to buy a piece of just 100 by 100 angled zinc aluminum so I could spray it and use it for some flashing. Because the studio I'm in now, it's kind of attached to the rest of the house. Not really. I had to cut through the roof sheeting. I had to attach the roof sheeting to the other house. And I do all these things. This is why the videos haven't been coming out as much in this month, because I've been working to get the house ready to lift. Stripping all the copper and everything. I've been keeping it all. I bloody well have been keeping every piece of copper I've stripped out of this house, guys, because it's damn expensive. But going to Bunnings, I'm seeing how much every little thing costs right now. Everything that's imported, every piece of metal, every building material, it's all going to the moon. So, if the hedge funds are right, and they're shorting the dollar and the dollar goes down, that's going to have cost of living implications for all of us. Then the RBA will get that inflation they really wanted. The RBA has been stubbornly resistant to market expectations, giving reason for investors to sell the Aussie, said Marshall Gittler, head of investment research at BD Swiss Holding Limited. The gap between what the market expects them to do and what they say they're going to do is perhaps the greatest among the major currencies. The Aussie has fallen about 8% in the past year, the third worst performance among Group of 10 currencies. The risk-sensitive currency has also been battered by surging Omicron infections and worsening Russia-Ukraine tensions that have spurred investors to seek haven assets. It was little changed at around 71.30 US on Monday after rising 0.9 last week. Apart from the Aussie, hedge funds have also increased net short positions on the yen, Swiss franc and Canadian dollars. They've added to net long positions on New Zealand's dollar and the CEFIC data shows. So there we go, everyone. Hedge funds shorting the Aussie dollar, but they're short on the yen, Swiss franc, and Canadian dollars, and long on New Zealand dollar. Let's have a look here. Let's look at NZ. Okay, the state that didn't join the federation. We've got an economic complexity of 79. Let's have a look at New Zealand. And their economic complexity is 50.5. New Zealand's exports are more complex than ours, everyone. So in many ways, and this is where their biggest export is concentrated milk and butter. And I go out of my way actually to buy my kiwi butter because you've got a greater chance of having grass-fed beef feeding the cows over there than here. So I'd recommend go for the New Zealand products, guys. Go for their butter, their milk, their cheese. It's really good. You get some really nice stuff from Aldi as well. But anyway, off topic. And you can see their biggest export partner is, does it say here? It's China, then Australia. We're the second one here, everyone. So they're long on the New Zealand dollar, guys. Maybe that's something to consider. So let's have a bit of a talk about this. So what do you reckon, everyone? Do you think this is should we all be worried? Is the dollar about to collapse? Is it going to have huge impacts on us? It might. It might take a bit of a shave. Remember when it was 45 cents, everyone? Are you old enough? Most of you will be old enough to remember that, or even older. And you just have to roll with the punches. You have to appreciate that if the dollar goes down, it's going to have implications for us in some regards. All of our exports will seem more attractive. Tourism, university education will also seem more attractive. But also property will seem more attractive, everyone. This is one reason why I am diversifying my investments. I want to have a portion of it in the US, a proportion of it in Australian income-producing assets, so we can hopefully mitigate some of the impact of the dollar going down. And that's the issue, guys, with regards to when you're investing. There'll often be a bias towards your own country where you're in. So you've got to look at spreading around. I'd love to get into some Japanese stocks and then some European ones. What do you reckon, everyone? Anyway, guys, thank you for watching this episode. I'm just bringing up my channel here so I can pick which one I'm going to plug in the next video. It's seamless here, guys, seamless. So I want to recommend this video about subscribing for air conditioning on your car. $25 a month. It just doesn't make sense to me. I can understand why they're doing it, but bloody hell, do we want this future, guys? Really? I'll see you next time. Bye for now.